India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Last day of the week, and I dare say, thank God it's a Friday. Markets have been sort of doing well, and I think they did very well yesterday with that sharp bounce off the day's lows. We ended about 100 points higher on the Nifty, even as the Nifty Bank continues to struggle. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, happy Friday, guys. Happy Friday to our viewers as well. We've all made it through another week, so pat on the back just for that to start off, right?
I'm feeling very, very good this morning. It's a Friday. It's the end of the month, which means salary day. And we're bracing for my favorite month, which is September. So I'm looking forward.
The birthday month is coming up. So, yeah, birthday boy, get ready for those treats. But that's later.
Absolutely. And, there'll be there'll be that and more as we get into September. But, it's been an uneventful kind of a week, as if you look back, because it's basically the market's basically crawled and crept higher without any substantial directional thrust. I mean, is there momentum? Not really. I mean, across the board. But we'll get to that in just a bit, and we'll start with what happened last night, right? Because that's essentially the cue that you're going to pick up and start with. So, U.S. markets themselves were trading up for most of the session. Suddenly and puzzlingly, mid-session, actually, in the last few hours, there was a complete about turn. Some are sort of talking about sell orders from like a program trade, which kind of led to pressure across the board. The S&P ended almost unchanged, flat. The Nasdaq was down about 0.2%. There was no headline. There were a couple of geopolitical headlines, and there was something from NVIDIA, OpenAI. I mean, nothing which would cause a turn, but the markets did. NVIDIA itself was down about 6%. The mega cap tech pack, it ended about nearly 1% in the red. By the way, when you talk about mega caps, they are essentially now almost 28% of S&P 500 market capitalization. I mean, that's how important they are. A third of the S&P 500, the largest equity index, is just 5 names. And that's why we kind of focus on some of these bigger companies and what happens with them. Dollar index, it's up again. We highlighted this day before yesterday, and you saw a bit of a lift, and I think that's continued. So about 0.75, 0.8% in 2 days, and we are back above 101.36 on the dollar index. Supports came in at about 100.7 or so, which the market tested, which the index tested 2 days back. In terms of data, you have U.S. jobless claims, which was stable. Second quarter GDP was relatively strong. Pending home sales data came in weaker. Markets did not really react to any of this in any big way. U.S. core PCE will be watched, and that's later tonight for the U.S. But actually, the only big one which will move markets, because the Fed has said, well, it's not inflation, but it's labor data which will move the needle for us. And the labor data is NFP, which is only next Friday. And that's the real big one. The oil prices, I mean, they continue to bounce around, up, down. We're up about 1.5% last night, around $80, near $80 a barrel or so. Now, just coming back to the levels here, there's a big intermarket divergence between the Nifty and the Bank Nifty, which has got to resolve. The Nifty is strong, the Nifty Bank is not. One wonders how long that can continue. Yesterday, of course, you had help from Reliance, which sort of, moved higher and took the Nifty with it. But, you need Bank Nifty is still about 25, 28% of the overall sort of market, and you need that index to do well as well. Targets for the Nifty is the daily upper Bollinger Band. We are headed there, 25,300 or so. It's changed about 25,316. And eventually, we are headed to 25,530, which is the Fibonacci retracement level. That number has not changed. That's a retracement number, so will not. Support for the Nifty comes in at the hourly average, which is 24,981. For the Nifty Bank, it was another day of sideways consolidation. It's still quite a bit away from its all-time highs, unlike the Nifty, which is, of course, making new highs. Supports here come in at the hourly average, which is 50,922, and the 20-day moving average, which is on your screen, at about 5,600 or so. Near-term upside is the 50% retracement of the decline, which is 51,058. and 51,508, beg your pardon. We're at about 51,150 as of yesterday. And supports come in as a swing low, which is 50,856. Actually, we are closer to the support than we are to the resistance or the target on the upside for the Nifty Bank. The GIFT Nifty will come up on your screen and give you an indication of the start. I mean, actually, practically pretty much all days this week, we've had at least the indicative open has been pretty flat. Nothing large at all on the upside or downside. But, you know, inevitably the market's found a bid and it's moved higher through the course of the trading session. Surabhi.
Well, absolutely. Just on the PCE, which is the watch point tonight, for what it's worth, just to put the numbers out there, the expectation is a 0.2% increase if you look at it month on month, and 2.5% annualized number. That's the increase. But like Prashant is saying, maybe that's not the important number to look at. Ultimately, it's going to be the jobs report, which is next Friday. So coming to data, actually there's a lot of interesting and very mixed data out of Japan. The market right now is not reacting. In fact, Asia is looking very good. There's a sea of green across Asia if you check out any of the major indices. Talking about the the data points now, for the Bank of Japan, this could be a little confusing because the Fed is on a cutting slope. But look at the data out of Japan. Inflation has risen more than expected. This is Tokyo inflation, which is seen as a barometer for the rest of the country as well. July inflation in Tokyo is higher than anticipated. But at the same time, retail sales data is weaker than expected. July data, again, 2.6% increase. And the unemployment number is more than expected. So very mixed cues out of Japan. Let's see. But I think, markets have priced in the fact that the BOJ is simply going to stay on hold no matter the data. But for what it's worth, just put it out there. Coming to Brent, the price is now again approaching 80. There's been a lot of volatility in oil markets this week. So why did we suddenly see this move back again? Two reasons. One, well, the market initially thought, okay, Libya's cut. So we had that big spike all to 81. Then the market said, okay, maybe it's not too much. There's some political rhetoric and we'll get back on stream. So there was a fall. Why was a rise again? Because now official data out of Libya is saying that the cut in output is about 1.5 million barrels a day, which is not small. Libya is a major contributor to the oil market output. So the cuts are showing up, and now the market's wondering whether this is going to last. That's number one. And then Reuters put out, a report suggesting that Iraq could be lowering output as well, from 4.25 million barrels a day to 3.9 million barrels a day. So these two things coupled, because both are major contributors to the oil market in terms of output, led to that higher bid on oil. So that's something that we'll watch out for. Come back home, the flows picture, again, I mean, because of the humongous blocks that are happening, the numbers are all over the place. But, to put the data on the table, FII's buyers to the extent of almost 3,300 crores, domestic institutions buyers to the extent of almost 2,700 crores. That was the kind of, fund inflow that we got. Now, another interesting shift, Prashant mentioned the divergence between Nifty and Bank Nifty. I was looking at the divergence between the Nifty and the mid-cap index. This shift has been the hallmark of trade this week. The buying has been concentrated in the large cap space, yesterday included. And for the week, the tally is the Nifty is up about 1.3%, while the mid-cap index has underperformed. It's down 0.5%. Now, you could argue whether, this is, of course, a sign of impending weakness or perhaps just a shifting of positions. Quickly moving on, Reliance will stay in focus. Let's see, because there's no announcement in terms of a listing immediately. Whether the bonus issue can keep the stock excited, that's something that we watch out for. And last but not the least, watch out for the sugar space. You'll hear a lot more commentary on it as well as we go forward, because in terms of policy, major relief coming in. Now, sugarcane juice as well as B molasses, C molasses, all of it can be used to manufacture ethanol, which is good news for the distillery players. So sugar is going to be in focus, and we'll get you more on it in a bit. Nigel.
Well, before I slept last night, I looked at the Nvidia stock and it was down only around 3%. I was going to get up this morning and said, I told you so, because it had recovered from the day's low. But unfortunately, it got sold into, and it ended with a cut around 6.5%, but better than the negative 7.5% that it started off with. So that's about Nvidia. But the markets, well, the Nifty has been on an 11-session winning streak. And that's the first time we have seen that in the last 17 years, because the last time we saw this was in 2007. I'm not going to get into what happened in 2008, but for the time being, we'll take this data point positively. Good run is what we have had. We start a new series, which is the September series, and the FI long positioning, well, it's at a bit of an elevated level. So 210,000 contracts is what we have on the long side, while the clients, they are net short. And this combination, actually, of the FIs being aggressively net long and the clients being net short, it's not given blockbuster gains, actually. It's given gains if you look at the past few series. Well, when the long positioning is not so aggressive, actually you get better returns. Like we saw in August, the long positioning was more or less tepid at around 60,000 contracts or thereabouts. So let's see what September holds for us. In percentage terms, the FI long positioning is at around 70%, short positioning at around 30%. Now, moving to the stock futures positioning, though, they continue to remain net long at the start of this series as well, both the clients as well as the FIs. So it could continue to be a stock-specific market. Now, the last few days, the good point is that the Nifty is making higher highs. On a day-to-day basis, we have been seeing this. So today, it's got its work cut out. We'll have to go past 25,200 if, in fact, we have to continue this trend. But that's something that I view positively. The levels that I'm looking at on the Nifty, going by the options data, since the 25,000 put has a fair bit of open interest. Support comes in at around 24,850. The 20 DMA is as well lower. These are the support levels that I'm looking at. Till these levels hold out, you'll have to say the uptrend and the bias will continue to remain on the upside. But the Nifty Bank, well, it's not able to hold on to these higher levels. This 51,300, 51,400 mark, that's been a bit of a resistance zone. And on a day-to-day basis, we have seen that it's been coming off the top. And the chart as well will tell you the picture. We're not able to conquer the 50 DMA on the Nifty Bank. So that's going to be the important trigger. Almost all the week, we have been going on talking about this mark. So let's see whether it can fill the gap. And today, it's got a trigger, because you have the MSCI passive flow rejig that will take place. The total estimated inflow can be between $4.5 to $5 billion approximately. IFL, alternative research, they are talking about $5.5 billion. And out of that, HDFC Bank will get the bulk of it. So in case the Nifty Bank needs to move up, it's got its work cut out. HDFC Bank could be the trigger for today's trading session. Yesterday as well, it ended higher. We'll keep an eye out on this. Last hour of trade, a lot of stocks could move around.
Right, Nigel, thank you very much for that. So lots of stuff to talk about and lots to discuss. Well, straight off the block, the big talking point is going to be sugar, right? The government yesterday permitted the use of sugarcane juice and sugar syrup for ethanol production in the 2024-25 ethanol supply year. This is reversal of last year's restrictions which were imposed. We have Atul Chaturvedi, the executive chairman at Sri Renuka Sugars. We also have Prashant Biani, VP Institutional Equity Research and Sector Lead for Agri Inputs, Sugar and Hotels at Elara Securities. Gentlemen, good morning. Great to have both of you early on here on CNBC TV18. Atul, good morning. Prashant this side. If I can start by asking you to put the move in some context for us, because I think the restrictions came late in 2023 and expectation was that post-general elections they would be eased. Now it's, of course, been done. What does it mean for the industry and what does it mean for you?
Well, it definitely means a lot. In fact, we welcome this decision, which we were expecting. And in any case, once the crushing season was over last year, whether the ban was lifted or not lifted was meaningless. It makes more sense that now it is being lifted with the next season just around the corner. It actually basically reflects two things in our view. One is that the government is seriously committed to decarbonization by 2070, and last year's ban on cane juice and B-heavy ethanol was just an aberration, and it's a correction of the past issue. Secondly, it also reflects the confidence in the decision makers that the stock level as far as sugar in the country is concerned is adequate. And the next year's crop also looks to be quite all right. So I think overall, it's a very good decision. But honestly speaking, I actually consider this as just a work in process. Because the government had, before the elections, announced that next year's FRP or the fair remunerative price for cane would be jacked up. And the amount was also announced. So now it's important that the cane juice ethanol and the B-heavy ethanol prices are also suitably increased. There's just no sense that maize ethanol would be selling at 72 rupees a liter and cane juice ethanol at 65 and B-heavy at 60. So we expect the government to take suitable action to jack up this price. And all this is definitely positive for the sugar sector and even from the Renuka's perspective, because we are possibly the largest manufacturer of ethanol in the country, so it should help us, definitely. It's a very decision.
Right. Atul, if you can tell us, for the industry, so the ethanol price revision is also expected, but yes. Pending that, just with this move, will there be any, this brings certainty, sure, but beyond that, Is there any earnings? Are there any earnings implications right away? Or do you think that will only sort of start to show up once the ethanol price kicker also comes in?
No, in fact, whether we like it or not, all these changes are going to be relevant once the next crushing season is started. Because cane juice as of today is not available because crushing is just not there. So I would say October onwards, it should start impacting the operations and operations big time.
Mr. Chaturvedi, sir, just a quick question. Yesterday, I think there was another move. Now, a certain quantity of rice can be lifted from FCI in order to sort of use that as feedstock for ethanol. Just want to understand whether from Renuka's perspective, do you look at other grains at all, or do you restrict yourself to cane juice and molasses? And also you mentioned the increase, right, that the price has been static for ethanol. So what is the kind of increase that you would expect or that you would hope for from the government?
We are actually looking at an increase of closer to what the maize ethanol price is. Say, for example, as far as cane juice is concerned, which is about 65 rupees a litre, we want it to be jacked up to closer to 72 or 73 rupees a litre. And secondly, for the B-heavy, we want it to be suitably increased to about 66, 67 rupees. So that we hope the government would take suitable decision in the matter. And as far as your question on the rice is concerned, let's face the fact that India is struggling with massive stocks of rice. And this has also got augmented with the ban on white rice exports. So your stock levels have got built up. And the next year's rice crop also looks to be quite all right. So I think you could possibly say that 2.3 million tons of rice being earmarked for ethanol via the auction route, it could possibly be treated as an import substitute. So effectively, instead of exporting the rice, they have gone in for the import substitution via the ethanol route.
Got it. Mr. Chaturvedi, good morning. Nigel on this side. Wanted one number from you. What kind of distillery volumes you're factoring in for this year as well as for the next?
In terms of what? The volume of ethanol?
Yes.
Or?
Yes, volume of ethanol.
Oh. We would expect the ethanol volume to be pretty high. In fact, we've not done the numbers as yet. But
for Sri Renuka Industries, sir, for Sri Renuka, what kind of number would you be working with?
Sri Renuka, we would possibly feel that this year we could be possibly doing more than 20 crore litres.
All right. And for the next?
Next could be higher. Next could be higher than that. In fact, our capacity is above 25 crores, and we see no reason why we should not be in a position to achieve that.
Okay, got it. All right. We appreciate you joining in, Mr. Chaturvedi, and giving us your first take on this. But let's get in Prashant as well, who's waiting by. Hi, Prashant. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. How do you read this piece of news? I understand that maybe you are factoring in that this leeway will come, but maybe it's come sooner than expected. So your initial take, and who stands to gain the most by this?
Good morning. Yeah, so this move was expected, but the government decision of this coming in August is timely rather than waiting for crushing season to start for a decision. That I think is sentimentally positive for the sector. And yes, we were already expecting this. So numbers wise for FY 2025, the numbers are not changing. And the entire sector is going to benefit from this, from the normalization or resumption of the full-scale ethanol blending, and with the resumption of FCI sale of FCI rice for the grain ethanol manufacturers. I think the grain ethanol manufacturers as well as the dual feed manufacturers in sugar industry, these companies are going to benefit.
Name them, Prashant, that would be helpful. I mean, just from a distillery perspective, say for someone like a Triveni Engineering, what is the kind of additional kicker one can expect on their ethanol side of the business? Or any of the other beneficiaries, really?
Right. So the benefit will largely come from H2, which is when the sugar season starts. So the benefit will be split between FY25 and 26. But just from a sugar season perspective, if we talk about, then I think the volume growth could be anywhere between 20 to 25% for the larger companies like Balrampur. And for small players, depending on their capacity and what type of feedstock they use, the volume growth may be accordingly. But a good 20% volume growth is possible from a season to season perspective starting the next season.
And this is higher than before? This is higher than what you'd earlier assumed?
No, this is what we were assuming.
This is what you'd assumed.
Because you were factoring in, I guess, the fact that sugarcane will also be opened up. Mr. Chaturvedi, sir, just one more point. The additional news that came in, I think, overnight was that the quota itself, the release quota for, I think, September and October is going to be a lot higher because we're getting into the festive period. The only other overhang in terms of regulatory action is opening up exports. What are you expecting and hoping on that front?
Has put your call on hold.
All right. Okay. I think we'll try and reconnect that through the course of the day. We'll get you some more reactions as well from other sugar companies. Mr. Chaturvedi, appreciate you joining in. Prashant, thank you very much for taking the call early in the morning, and thanks for your time. We'll take a quick commercial break here, but we'll just leave you with some opinion through that we've got getting through on other asset classes as well. So this is V. Lakshmanan on the rupee, who says that they see mild gains tracking Asian peers and MSCI related flows. Remember, MSCI changes are effective at the end of the day, and they're meaningful, and they can essentially push the dollar-rupee lower. He says the dollar index recovered marginally after making a 13-month low, better than expected US GDP estimates. G7 currencies paired gains with the dollar recovery for the coming sessions. He expects USD INR to trade between 83.75 to 84.15 to the dollar.
On bonds, Lakshmanan V says that the Indian government bond yields traded in a thin range as markets await Q1 GDP data and key economic data from the US. He says Fed Chair Powell sounded more dovish than expected at his Jackson Hole speech, leading to expectations of a certain rate cut by US Fed in September. However, he says US GDP for the second quarter came in higher at 3%, indicating firm growth, which may push back case for aggressive rate cuts. He's adding that the coming sessions could see the 10-year benchmark yield in a band of 6.8 to 6.9%.
We've got a lot of stock-specific action to track for you. For the time being, we run you through the list. We look at Balrampur Chini, Sri Renuka Industries, Triveni Engineering, Praj Industries, Prestige Estates, NLC India, Interglobe Aviation, PB Fintech. All of them will be reacting to positive news flow, while we have Max and SpiceJet that will be reacting to negative news flow. I'll tell you what, let's slip into a short break. You come back, we'll dwell further into the top 10 segment. Stay with us.
Welcome back. Well, lots to go over and plenty of cues to track. We've discussed the big sector sort of story of the day, which is sugar. There are lots of other interesting stocks as well to keep an eye on. And our team is standing by with the CNBC-TV18 list of top stocks to watch today. Guys, good morning and happy Friday to all of you. Vamakshi, you go first because your sector is making the headlines. Sugar, we just got some perspective from the guests, but just put it in perspective because there's a lot of news flow in the last 12 hours.
Well, absolutely a lot of news flow indeed for the sugar industry. The first news flow that came through was that the government has lifted restrictions and has allowed ethanol production from cane juice, B-heavy molasses, C-heavy molasses for ethanol supplier 2024-25, which starts from November 1st. This is a big relief and a big positive for the sugar industry, and that is because the distillery segment was doing very well until the ethanol policy changed in Q3 of FY24. Ethanol production also receives generally a better margin profile as compared to sugar sales. So therefore, this bodes well for companies like Balrampur Chini and Sri Renuka. The other announcement that came through was that the government permitted the sale of up to 2.3 million tons of rice from Food Corporation of India or FCI. This bodes well for Triveni Engineering, and because the company in its Q1 con call had said that they had substituted grain feedstock with maize, but the margins for FCI rice were very healthy and attractive. So overall, this bodes well for Triveni Engineering. It also bodes well for Praj, and that is because because it supplies tech for distillery operations for most of these companies. Other than that, the industry is also hoping for a hike in ethanol price as well as lifting of restrictions for exports. So that again, we will be watching out for.
All right. Vamakshi, thank you very much for that. So that's a fair bit of sugar right at the top. Well, we've got some fundraise as well. So Prestige Estates will be in focus. There is Max Estates, which is also raising money through issuance. And there is news flow for NLC. Vivek is here to wrap up all those things. Vivek, morning.
Well, good morning. Fundraising continues, and most of the promoters are doing QIPs in order to raise funds. Now, the first stock on the radar, the first company on the radar is Max Estates. Now, what we understand from our sources is that the company has launched a QIP to raise close to 800 crore. The indicative issue price is at a close to 12% discount to yesterday's close at 597.5 rupees a share. Equity dilution at almost 9%, and the company will be using the funds for land acquisition as well as interest and development of land development rights. The other stock on the radar, again, quite a large QIP coming through, is Prestige Estates. Almost 5,000 crore is what the company is looking to raise via the QIP route. Indicative issue price of close to 1,674 rupees a share, almost a 7.5% equity dilution. What is the company raising the funds for? Number one, debt repayment, also land as well as land development rights. That is something that the company is looking to acquire, and also looking to go ahead and do some investments in subsidiaries as well as JV companies. And lastly, NLC India, some important JVs that the company has announced. The company has, gone ahead and done a JV with Rajasthan Rajya Vidyut Utpan Nigam Limited. Basically, they are going to be setting up a lignite-based thermal power plant in Rajasthan to meet the fuel requirement of the thermal power station. And the JV also has been formed in order to go ahead through NLC India Renewables Energy Limited to development renewable power projects of up to almost 2 gigawatts, that is 2,000 megawatts. So going with the green as far as NLC2 is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Sudarshan. Sudarshan, Interglobe, PB Fintech, large trades out there, and there's news flow on SpiceJet as well. Fill us in.
Morning, Nigel. So it's an update to what we have reported yesterday. So first one is Indigo. Rakesh Gangwal's trust has sold more than 5% stake via block deals, and Morgan Stanley Asia PT has bought nearly 1% stake on behalf of its clients, and block deals likely to have happened at rupees 4,715 per share. Next is PV Fintech. Tencent Cloud Europe has sold more than 2.1%, and buyers include Axis Mutual Fund, Euro Pacific Growth Fund, HDFC Life, ICICI Prudential, and SBI Mutual Fund. And following yesterday's block deals, Tencent Cloud Europe's holding in PV Fintech now stands at 2.1%. Last is SpiceJet. There are two news flow which might have a negative impact on the stock. First one is company has placed 150 cabin crew members on furlough for 3 months, and company says this step has been taken in response to current lean travel season. Second news is aviation regulator DGCA has put airline under enhanced surveillance. DGCA says special audit conducted on August 7 to 8 revealed certain deficiencies in operations, and that's the reason it has put on surveillance to ensure safety of operations. So keep an eye on these three stocks.
Okay, got that. Sudarshan, thanks very much. We'll keep them on our radar as well. Let's quickly recap the list of stocks to watch then this Friday. The ones that have positive news flow around them are Balrampur Chini, Sri Renuka, Triveni Engineering, Praj Industries, all of them on the back of the sugar regulatory developments. There's also Prestige Estates, NLC India, Interglobe Aviation, and PB Fintech. The ones that have some negative cues around them are Max Estates and SpiceJet. Okay, so that's the stock list for the morning. Let's now look at the commodity cues in focus as well. We have Manisha joining in with a roundup of all the action. Manisha, good morning.
Morning, and thank you for that. So, well, the top commodity today clearly will be sugar, and you've discussed that. So I'll take on crude oil prices, which is headed for a second monthly decline. Well, the ongoing China demand concerns clearly seems to be weighing on the prices here. The street will watch out for the OPEC and allies meeting that's in the first week of September on what they do talk about, gradual output cuts from the month of October of 2.2 million barrels that has been spread out in the next year. So that statement, those guidance would be important to watch. But the only thing that really seems to be shining right now is the gold price is very close to its all-time highs of $25-30 an ounce. Well, it is about U.S. inflation data today, and any cues coming in from that will tell you on where the prices are moving.
All right, we'll take a quick commercial break here. Manisha, thank you very much for that. We'll come back. Deven Choksi will be with us with some fundamental stock talk. And of course, we've got the Reliance AGM takeaways to discuss as well. So all of that is coming up.
Welcome back. You're tuned into Bazaar Morning Call. Well, Deven Choksi, MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Good morning and good to see you in. Well, let's talk about the big mover yesterday. Reliance Industries came out to bat and helped the Nifty, smash it out of the park. What's the view of the stock? You have that additional technical trigger now, which will be a bonus issue. Tell us more.
Yeah, Nigel. Good morning. Well, of course, the bonus issue is one aspect, and definitely I think this is an important one. Largely because of the fact that I think most of the businesses have completed the capital investment cycle to a greater extent. The last one, which is the renewable segment, I think is undergoing the implementation. So I think by next year, they would also be, by and large, finishing the, I think, larger part of the capital investment cycle. So obviously, on a 6,700 crore equity and on a 7 lakh crore worth of reserve, it's a no-brainer as far as I think the issue of bonus is concerned, because the serviceability of the equity is never in question in this kind of a situation. With more than 1,60,000 crore worth of EBITDA producing, which is growing at around 15% on a yearly basis, I guess I think it's given that I think this kind of bonus will get easily absorbed as far as I think the company's operations are concerned. More importantly, I think capitalizing the reserves at this point of time also gives an indication that somewhere down the line, I think the company is preparing itself for de-merging the retail business as well as the geo platform business. Because I think generally when you capitalize your reserve, at that time you give an indication to the investors that yes, I think you have completed the program, and now I think the businesses which are going to be separately listed, they will probably find its own way. I think so that is an indication in between the line message that one can read out of it. Otherwise, I think from the annual general meeting, I think a couple of things which I think has appealed me most. This company is trying to disrupt its own business model by way of creating a similar kind of an impact through implementation of AI and deep tech technology in their entire operations. This is probably on the size of a company like Reliance, I think is not heard of, I think very commonly. I guess I think this is what they're challenging themselves, that before the competition or global play could possibly swipe them out, they are actually, I think, preparing this company for a long-term play, I think, with a sustainable operations. So that, I think, remains, I think, a cornerstone of the entire AGM speech. Apart from that, I think every 3 years, 4 years, retail business and geo platform business, they have indicated that I think they will grow double in size from what they are currently. So 90,000, 1 lakh crore kind of EBITDA between geo platform and the retail stands doubled, I think, 3 years, 4 years from now to 2 lakh crore. And I think that's an important key takeaway. Along with the renewable segment, I think, contributing as much as I think the O2C segment contributing today in next 5 years. So I think they are creating a vision of at least 3 lakh crore plus kind of an EBITDA making business for the company in the next 3 to 5 years time.
Devin, good morning. How would you look at some of these fundraise efforts, especially in the real estate space? Yesterday there was that rich list which was put out by Hurun, right? And it was noticeable that real estate companies and promoters of real estate companies were some of the maximum new additions, I think, came from that space, from real estate. And I think that talks to the boom that we are seeing across the board. Most of course, the value of most of the people on that list is tied to stock holdings, the underlying value of the shares they own in their businesses. But Prestige Estates, Max Estates, both doing a fundraise round. Max promoters themselves are also putting in money along with outside investors. I don't know if you have any views.
Yeah, Prashant, good morning. Well, as such, I think that this is an asset class. The real estate as an asset class is basically a class which is going to be due for next 25 to 50 years kind of development in the country which is happening. They are likely to be, I think, participating significantly into this particular development. So if you are an entrepreneur, if you are owning the real estate company and probably, I think, growing into this particular mode of providing the business solutions across the country, then probably I think is the best time that one can argue for. In my viewpoint, I think business remains capital intensive for a reason that I think for expanding the operations, you continue to have larger amount of capital, and so would be the number of square feet I think that you construct. You require that additional capital. So I'm not completely surprised that I think some of the promoters are also, I think, raising money or deploying money in some cases because of, I think, this particular reason. In my viewpoint, I think the valuation-wise, if you look at most of the companies, they are adequately priced today. But if you are having patience to stay invested for next 3 to 5 years, then some such opportunities will come in between the times when I think you will get some of the corrected valuations available to you. So it's a long-term play as I see it. I think in the near term, most of the things are appearing in the price at this point of time.
Deven, just give us a couple of minutes. We actually want to discuss Tata Motors with you as well, because there's so much going on with the whole capital reduction scheme and the DVR is going, etc. So we want to discuss that with you and understand that. So allow us a couple of minutes. We'll come back to you. In the meantime, let's just go over the key highlights and the big announcements that came in from the RIL AGM yesterday and what the implications could be for the stock. We have Karan Taurani joining in from Elara Capital, as well as Balaji Subramaniam from IIFL Securities. Gentlemen, morning. Great to have you both on. Balaji, if I could come to you on all the Jio-related announcements, and there were several, right? A lot of talk about the Air Fiber, the Jio AI Cloud, the 100 GB of free data, so on and so forth. And also, of course, the sort of the big statement about the business doubling over the next 2 to 3 years. What were your big takeaways? And purely from a stock point of view, do you think there'll be a disappointment? Because there's no indication at all of a listing right now, though the business plans obviously seem to be, very, very impressive and on track, perhaps.
Hi, good morning. Thanks for having me on the show. So firstly, to take this big picture call of Reliance talking about doubling of revenue and EBITDA of Jio platforms over the next 3 to 4 years, I think that target appears reasonable. So, the key drivers here to look forward would be the tariff hikes that the industry took a couple of months back. And my sense is that we are in for another round of tariff hikes maybe in the next 12 to 18 months. So, between these two tariff hikes and the continued subscriber addition, as well as the fact that Jio Air Fiber would continue to see subscriber additions, which would come in at a significantly higher ARPU compared to where the mobility ARPUs are. I think in the next at least 4 years, the revenue and EBITDA doubling target appears achievable. As far as Jio Air Fiber is concerned, the chairman yesterday was talking about a target of adding 1 million customers every 30 days and a medium-term target of somewhere around 100 million households. So if you see, there the progress has been steady, at least in terms of the in terms of the subscriber additions. There has been an acceleration, but I wouldn't rule out at some later point in time maybe entry lower priced plans. So even if you look at the FTTH offerings, Jio had started at 399 and subsequently they came out with a 198 plan. So I wouldn't rule out something similar also happening in Jio Air Fiber at some point in time, which I think would probably help them move closer towards the target that they have set for themselves. As far as the Jio AI Cloud is concerned, the 100 GB storage for Jio customers, I think those are all different ways in which you try to improve customer stickiness and lower churn, because that is one extra reason for a customer to probably hold on to his Jio SIM. So I don't know how effective that will be in terms of subscriber additions, but at least that appears to be a good customer retention strategy.
Just a point, since now that we don't have the immediate trigger of a carve out and a listing, I guess it boils down to now going back and seeing what happens at that ARPU level as well. So Balaji, there, one of your peers at a different brokerage, I think it was UBS, brought a very thought-provoking piece. Now, their contention is that while we've seen some tariff hike announcements, the question is the trickle-down effect and the sustainability, because their contention is that maybe customers will start downtrading. And you also just mentioned slightly lower price packs, right? So net, what is the effect of the last round of tariff hikes that you see? Has it completely percolated in the first quarter itself? And what more would you expect and pencil in on tariffs and ARPU for Jio as we roll along?
So historically, what we have seen is that at least in the last time, when I say last time, I'm talking about the end 2021 tariff hikes. The headline tariffs went up by about 20%, and if you see the kind of revenue flow through that happened, it was around 14-15%, because there was some down trading and there was some swing consolidation, which I think will probably play out this time also. So my sense is that one can probably expect somewhere around a 14-15% kind of a revenue uplift from the tariff hike that what just got announced. So maybe we will see the full benefit of that coming in only by 3Q, because you have people on 3-month packs, etc. They would have locked in the earlier tariffs sometime in the end of June, and by the time they are on the higher new tariffs, it could be late September, October. So net, I think it will probably take a couple of quarters by when you will have the tariff hike flowing through into the revenue. So that is what I would think. As in somewhere around, so Jio was at has been around 180 rupees ARPU. That will probably go up to somewhere around 205, 210 once the entire tariff hike gets into the base.
Okay, all right, got it. So let's see third quarter onwards how this shapes up, and of course the implications of all the Diwali launches that will happen with respect to Jio AI Cloud as well. Karan, thanks for joining in. So I'm sure you heard the speech as well and all the highlights. There was a lot of mention of the media businesses as well. I remember that Mr. Mani's statement that the time has come perhaps for India to challenge sort of the intellectual domain of media, global media. So that was interesting from our perspective as well. But you tell us what stood out for you and what are the key takeaways and the stock implication, if any.
Hi, morning. I think in terms of the key takeaways, it's very clear that they really want to scale up the Geo Fiber business. And as mentioned by us, whatever deal that is happening right now in terms of RIL Disney, last mile support is of utmost important because I think digital is a business of scale. And in case you want to go to a large customer base, you need last mile support so that you can kind of raise ARPUs over a period of time. So the plan is very clear that bundle these kind of offerings, provide the customer the content and the pipe to use that content, or the bandwidth rather. So I think it's very ambitious plan. I think it's good. We'll have to see in terms of how these things actually work out. And the only key is user experience. So I think if JioCinema is able to match up to user experience of global counterparts like Netflix, Amazon, and even Disney, and so on and so forth, we can see JioCinema becoming the largest app in India today, and even challenge the likes of YouTube India. So there is potential for scale, and execution is key from here on.
Okay, all right, gentlemen. Thank you for the quick call and some quick perspective on of course what we've seen and heard at the Reliance AGM yesterday. Thanks for joining in. Let's just head back to Devain for a couple of more questions. Devain, I was talking about Tata Motors, right? Yesterday there was a big surge on the stock, 6% higher, as the company goes through a lot of the corporate actions, including the changes in the share capital itself and the DVRs, which will be on their way out. Can you just simplify for us exactly what's going on and what is it that shareholders should keep their eye focused on?
Yes, I think this is slightly a tricky question from the point of view of taxation impact, I think, which is coming up. The DVR shares are getting converted into the ordinary shares, and today is the last day of trading. From 1st September, that is Sunday onwards, I think these particular shares would be, I think, getting traded into the normal shares. Now, if you look at, I think, the impact coming in, I think the DVR shares basically converting to ordinary shares, there were 3 legs of taxation out there. The first leg of taxation is that I think whatever the number of shares, 51 crore shares of DVR, they are basically going to be attracting the deemed dividend because of the free reserves that is there in the company. So as per our workout, on about 10,000 crore free reserves, I think it is about 200 rupee per share kind of an impact coming in. So this 200 rupee per share would be considered as a deemed dividend in the hands of the DVR shareholders who are basically converting their shares into ordinary shares. That is the first leg of impact. So deemed dividend would have its own taxation impact at the same time. Then the company is forming a Tata Securities Trust, I think, in order to basically settle the TDS part of the deemed dividend, which they have to deduct before making the payments. They will probably deduct the 10% TDS, and that is where probably I think they will have to sell some part of the shares allotted to the DVR shareholders. So that will probably result into the reduction in the ratio from 7 shares of Tata ordinary shares of against 10 shares of Tata DVR. It will further reduce some part of the shares. So that is the second level of taxation impact. The third level of taxation impact, as I see it, is in the hands of the investor. When he is basically getting the converted shares, he is attracting long-term capital gain tax in case they are holding for more than 12 months. So I think these three legs of taxation is there. Of course, I think the deemed dividend tax will be first deducted out of the price, and then probably long-term capital gain tax will be calculated. But as you can probably make out, that it is a very weird way of, I think, working out the entire thing, and probably I think taxation structure is quite complicated. In my understanding of the subject, it is best that I think the investors would allow the shares to get converted into the ordinary shares and end up, I think, taking the taxation part on the other side, instead of, I think, selling the DVR shares today in the market and buying the Tata Motors shares on the other side. That may probably result into unnecessary amount of cost, I think, that they may incur. So I think the first option is better. Allow the DVR shares to get converted and let you get, I think, the Tata Motors ordinary shares in course of time in next 15 days after the book closure is announced.
Okay. All right, Devin, that's helpful. Thanks very much for simplifying what seems to be a fairly complex exercise as the DVR shares are phased out. Thank you for joining in. You have a good day, and we look forward to connecting again. We have to take a quick break on that note. On the other side, of course, we get our technical experts in Mitesh Thakkar, and Avni Bhatt joins in with some trading ideas.
Okay, welcome back. There's 6 minutes to go for the pre-open session. Mitesh Thakkar and Avni Bhatt are with us with what they want you to do as far as today's trades are concerned. Gentlemen and lady, great to have both of you here. Mitesh, so, the Nifty is moving up 11 days on a trot, and that too without any help from banks. So there is that divergence to note. So will the Nifty pull the Nifty bank along at some point? Will that start to happen? What's the sense, and what are your trades this morning?
Morning, Prashant. Actually, yesterday I felt that the Nifty bank could see some kind of an upward traction, and we had some buy calls over there. The Fin Nifty has been doing well, so I think the bank Nifty today could be one index which could, compensate for its underperformance. But on the Nifty, I would maintain targets of 25,400. And on my stock side, I have all buy lists today. AU Bank is a buy with a stop at 628 for targets of 666. Coforge is buy with a stop at 6,200 for targets of around 6,450. IOC is a buy with a stop at 173 for targets of 185. And Persistent System is a buy. Keep a stop below 5,000. Look for 5260, 5270 as the target area.
Got it. Thanks for that, Mitesh. Well, let's welcome Avni as well into the conversation. Hi, Avni. Good morning. We are starting a new series. Quick observations on the roles. How is the series panning out, and your trades?
Yes, the rolls are more or less in line with the 3 months average, and that doesn't indicate any directional cues as of now. But overall, the structure still remains positive as per our last discussion last Friday. India VIX is still giving us a lot of comfort. It's trading below 14%. So it's going to be a slow move. There will be a lot of consolidation. There will be phases of bouts of correction. But the overall, trend is on the positive side. So we need to be having a positive bias as far as both the Nifty and Bank Nifty are concerned. And I think from here onwards, Bank Nifty should take a lead.
Bank Nifty should take a lead. Great. Noted that point, Avni. What about individual stocks?
So I have 2 stocks on radar for the long trades. And both these stocks are structurally very strong stocks. They have seen recently they've seen some bit of price retracement, and they are trading near support levels and ready for a reversal. First is ONGC. We can take a long trade in this particular stock for a target of 338 to 344 on the upside and keeping a stop loss of 322. And the second stock is Coal India, a good reversal candidate. 527 was the close yesterday. We can take a long trade in this particular stock also for a target of 545 to 550, keeping a stop loss of 515.
All right. Thanks very much, Avni, for joining us with those trades. Mitesh, thank you very much. We'll take a quick commercial break here. There's 4 minutes to go for the pre-open session to kick off. We're going to come back and we'll have the pre-open rates. We'll also have an analyst from Bernstein, and we put the focus on banks and financials here, which have not been performing. What is keeping them back and what will push them to start performing? We'll ask them on the other side. Stay tuned.
Well, in a minute or so, we'll have pre-open rates that will flash for you on the screen. But before we get to that, let's welcome Chandan Taparia on the show. Hi, Chandan. Hope you're feeling good on this Friday morning. We're starting a new series as well. How would you approach the Nifty and the Nifty Bank? You know, an observation that we've been making last few days is the Nifty Bank can't get that 51,300, 51,400 mark. Your take.
Good morning, Nigel and Prashant. Thanks for having me. So Nifty index continues winning streak of last 11 trading days. It has been making high tops, high bottom on the daily and the weekly scale. Index has surpassed the previous lifetime high of 25,078, made a new record at 25,192. Yesterday, we have seen the rollover activities being the last Thursday of the month. The rollovers are 75-77%, which are in line, indicating the trend could remain intact. And as of now, till it holds above 25,000, ongoing momentum can extend towards 25,500, 25,750 marks. The good part is that volatility index is at lower levels. CBOE VIX is also below 17-16 marks. The global sentiments are supporting. So all the data setup indicate the bullish bias could continue. But when we talk about the Bank Nifty, which is slightly underperforming, got stuck in a range. Nifty made the new lifetime high, but Bank Nifty is still away by 2,200 points from its lifetime high. But we believe that it is holding well above its 50-day mark, so positive to range-bound bias could continue until it holds above 50,800 zone. It has potential to bounce towards 51,500. So bullish stance in Nifty, but positive to range-bound bias in Bank Nifty index. Now looking at the stock-wise, first trading idea is buy on SCL Tech. We have positive stance in Nifty IT, and SCL Tech is outperformer in the IT space. So we are selecting the sector and stock which are outperforming the peer competitor. Now looking at the SCL Tech, it has completed a rounding formation on the daily and the weekly chart. Even on daily scale, it has been moving in a rising channel, which clearly indicates that bullish stance could continue. Longs are adding with rollover activity, indicating momentum could continue. So one can buy with support of 1750. Stock has potential to rally towards 1850 zone. Second trading idea, that is market heavyweights Reliance Industry. Stock has completed an inverse head and shoulder pattern, which has bullish implication. Again, the consolidation breakout of last 27 days indicate positive move could be there. So one can buy with support of 2980 for an upside move towards 3200, and bullish bias in Reliance could accelerate the Nifty towards higher zone. Last trading idea, that is buy on Hindustan Petro. Positive price pattern, supports are gradually shifting higher. Better rollover with put writing activity indicate bullish momentum could continue. So one can buy with support of 408, and HPCL can head towards 440 zone.
Chandan, have a great day ahead. Thank you very much for all of those. Have a good weekend as well. We'll speak again next week. Thank you very much for that. Well, end of the day, MSCI changes will take effect. Vivek is here with what changes. And Vivek, tell us, any specific names you may want to highlight that you think should see some action. Go on.
Well, good morning. Today is an extremely important day as far as, passive funds are concerned, given the fact that this is actually a very high liquidity net inflow event for Indian equities. In the last hour of trade, you will see these changes take place as far as the MSCI linked ETFs are concerned. Now, what exactly is India getting? India today will get net inflows of over $5 billion, close to $5.5 billion as per IIFL Alt Research, indicating inflows of almost 40,000 crore rupees. Now, remember, what's actually happened as far as India's weightage in the MSCI Emerging Market Index is concerned. In this particular review, that is the August review, India's weightage in the EM basket has risen to almost 19.8%. Earlier in the last review, it was 19.4%. India's weight increase has come in at the expense of other emerging market countries, actually seeing a slight dip as far as their fortune as well as performance is concerned. So China, Taiwan as well as Korea will see some weight reductions. This particular weight increase in India is simply due to the outperformance of the Indian equities in the run-up to this particular event. Now, talking about the MSCI Standard Index and the names to watch out for, 7 additions and 1 deletion. This is the index that we will be tracking, given the fact that the impact here will be a lot higher. Which are the 7 additions? Zydus Life Sciences, close to $218 million of inflows expected today. Prestige Estates, Dixon Tech, OFSS, Oil India, Vodafone Idea, RBNL. These are the inclusions. The only exclusion being Bandhan Bank, expected to see outflows of close to $109 million. Along with that, the very important stock to watch out for would be HDFC Bank. Remember, MSCI said that they would be increasing the weightage in HDFC Bank in 2 separate tranches. Today will be the first tranche of the weight increase. Almost $1.4 billion is what HDFC Bank will see as inflows today. Important to note, a lot of these developments were earlier known as well, and market participants, especially active fund managers, have already started pricing in this particular development.
I saw HDFC Bank, I'm not sure because the pre-open has kicked off. Vivek, stay with us. HDFC Bank was showing a 5% pop, but that's just the pre-open, I think. I mean, obviously, 200 points in the Nifty, 700 points in the sensex. We'll let a minute, 2 more pass. But there is, of course, one tranche which is going to happen now for HDFC Bank. And, it's a big one, $5 billion. Now, first, Vivek, as you said, right, it's well anticipated, well advertised. So, people would have bulked up on many of these stocks. And then, so the actual price impact on the, the last hour, are there any names at all from the, apart from these 7-8 changes, which perhaps are likely, have not moved so far where some price action is likely?
Prashant, 3 names is what I'll be tracking today. First is HDFC Bank. Remember, in the run-up to this particular event, HDFC Bank actually was a significant outperformer. But 2 things dampened, the street sentiment. Number one was the fact that, the street was anticipating that this particular inflow will come in one tranche itself, expecting inflows in the range of $4 billion. That hasn't happened. Secondly, 2 other stocks. Number one is Zydus Life Sciences. This particular stock has corrected quite steeply after the results, but this particular event is almost a $218 million inflow. So that's a significant inflow as far as Zydus Life Sciences is concerned. And third stock, would be Prestige Estates. The company today, in a very timely manner has gone ahead and launched a QIP. The QIP discount is not too much, and the inflows too are quite significant. So these 3 stocks definitely, would be on the radar.
Nicely put, in a timely manner. Vivek, you think they probably would have had an eye on the MSCI rebal?
One thing to watch out for would be the very high volume action that you will see, especially in the last hour of trade. Now, remember, Prestige also has a lot of other triggers. Very tough to go ahead and predict the price.
Absolutely. No, I mean, but it's nice, happy coincidence. Thank you very much for that. So those are the changes: 7 in, 1 out. I think $5 billion inflow. Actually, the rupee should have started to trade. And I think I'm not sure if it'll show up now. But the dollar INR, I would suspect, should see a marked move at some point during the day, because it's a big inflow, money coming in. I mean, I think it should provide the rupee a decent lift. We'll see, but 83.82 right now, not very much. I think we're getting the first rates here as well.
So just on the pre-open, HDFC Bank is still the pop is not as much as 3.5%, what it was a couple of minutes back, but it's still 1.5% higher. Because for what it's worth, the money's finally coming in, and the street didn't celebrate this too much because of the reasons that Vivek mentioned, that this, weightage increase is happening in 2 steps, not the 1 step. And then, of course, there are other fundamental issues around which have kept a lid on HDFC Bank. So no major rally. So perhaps now that the event is happening, we're seeing that little bit of green. Reliance is the other one. Keep a track on this as well, because in the pre-open, the suggestion is that it's going to move another 1% higher, with that bonus cheer still being intact. Some of the other movers include an L&T, some of the names like BPCL and NTPC from the PSU space are also up and about. But let's move on and get some more perspective, putting the spotlight on the rate cut cycle and banks in general. Bernstein, in a recent note, said that they do not see India going through a sharp rate cut cycle, and they are expecting 50 basis points rate cut in the current cycle, with the real rate settling in at 1 to 1.5%. We have Pranav Gundapalli, senior analyst at Bernstein, with us. Pranav, great to have you on. Thanks so much for joining in. What you're saying is interesting, because I think a large section of the street was banking on the fact that we'll get into a rate cut cycle and maybe, gradually things start normalizing, and perhaps the whole deposit mobilization issue also starts resolving itself once we get in the lower regime. but you're not expecting anything beyond just 50 basis points in the entire cycle?
Good morning. See, I think for us, we see about 50 basis points in this first leg of rate cuts. Unless we have a dramatic reduction in food inflation, falling off a cliff or something, or if there is a serious global recession kind of an environment, which will warrant massive cuts across multiple markets. So the rationale here is that the focus for the central bank has remained on inflation, which is also why we've seen tighter liquidity conditions and therefore the whole discussion around deposit growth being weak, etc. So that would have to be resolved first. We'll first see a liquidity improvement before we see any sort of rate cut action from the central bank.
Okay, and what would the implications be, Pranav, if indeed this rate cut is going to be as shallow as just 50 basis points? What does it mean in terms of, asset liability issues across lenders, banks and non-banks?
I think two things. From a banks versus NBFC perspective, I think this means that the benefit for the NBFCs is going to be limited versus the banks, because they typically tend to benefit during a rate cut cycle, but that even it's a shallow one, the benefit would be limited. From the bank's perspective, I think what it means is that the whole margin compression that we talk about from a potential rate cut would again be limited. Now we're talking about potentially 10 to 15 basis points of net interest margin reduction from a 50 basis points of rate cut, which again would leave most banks with a NIM that is much higher than what they've seen, pre-2022. So doesn't result in a massive decline in their ROAs, which would be a bit of a relief, given that the current overhang on the banking sector seems to be the potential NIM reduction, as well as some of the other concerns around credit growth and asset quality.
So you don't see that much of a NIM compression for banks, right? That's the point.
Okay.
And within the banking space, what is your preference, Pranav? Going by all that you've said, I believe IndusInd Bank and HDFC Bank, you're leaning more towards them. Tell us the preference, and particularly when HDFC Bank comes in.
So I think two things here. In terms of preference, for us, HDFC and IndusInd at the top, followed by Axis, ICICI, and SBI, and then Kotak. Now, our view is, yes, rate cuts could be around the corner, but I think the focus will be more on the deposit accretion for the banks and the asset quality trends for the overall lending space. To us, those would be the bigger factors which drive the stock selection or the performance compared to the impact of rate cut. Now, for HDFC Bank, what makes it interesting for us is that there is still an idiosyncratic profitability improvement story that will play out. Whereas for most other banks, the profitability is likely to decline from their current levels, which is peakish. So that's what makes HDFC top of our pecking order. For IndusInd, the rate cuts benefit them a lot more than peers. And that's kind of why it comes up second after HDFC. For rest of them, I think while the compounding story is largely going to play out without any big risk, the chances of a big multiple re-rating looks limited, given that their ROAs are likely to decline from here, even if marginally, and that will limit any sort of a multiple re-rating.
Okay. All right, Pranav, we'll leave it on that note for this morning. Thank you very much for joining in and offering us that quick perspective on just the way the rate cut cycle could perhaps play out here in India. Back to the screen to check, what's moving. About a 90-point pop, that's what we have on the Nifty right now. At least in the pre-open, the mid-cap index doesn't look too bad. I mean, even the mid-cap index is managing about a 0.5% increase, but let's see how that plays along. Some of the sugar stocks, let's pull them up just for reference. Something like a Renuka is popping 9%, Balrampur, Dhampur. A lot of these stocks are expected to start on an optimistic note. So there you go, lots of green across sugar. Mitesh is with us, so let's quickly get the 910 call in. Mitesh, what's the view? Tell us the stock, and also just a word on the sugar trade. Would it interest you today?
See, my 910 call would be IFC, buy for targets of 185, and sugar has been in the move for quite some time. So not exactly a fresh entry, because if you look at the charts of Balrampur Chini, The stock has had a run up from 450 to now at 580. So not the best entry point. But if somebody is holding hold on, I think the long-term targets are still higher. But you might want to see a dip if it happens to buy into this up move, which is already started.
Right. Okay. Mitesh, thank you very much for that. I think we were about a minute and a half away from the market open, which will come up on your screens as we go along. Lots to track. I mean, 100 points higher on the Nifty. So this is fantastic going. 25,300 and change essentially was the first. I mean, that's the sort of daily upper Bollinger Band, which we were looking at, which we were working with. I think it'll come sooner than what one thought. And eventually, I mean, the bigger retracement is 25,530. I think that has changed a bit, but I think that's largely the number. So we've got the first rates on your screens anytime now. And how much of a change will come through from... Let's look at the HDFC Bank stock as well, because the Bank Nifty has been the big underperformer. It's been the drag. HDFC Bank is up about 1%. So it's not that much, but at least it's not down. So that helps because it's been... I mean, the Nifty has been... ex-financials have been doing very well, and you add a little bit of financials to the mix and suddenly the picture starts to look a lot better. So the first rates on the Nifty and the Bank Nifty on the screens, 25,250, 225. That's about 1/3% higher. I mean, this is a great start. Once again, the sensex is up 0.6. I mean, actually, not bad at all. You've got the mid-cap index, which is up 0.5%. So broader markets also looking up. And the IT index is blinking. I mean, it's just absolutely flat. I think we've got about 6 or 7 stocks which are in the red. That's essentially the Nifty heat map, as you can see. And the majority of stocks, the bulk of everything which is trading right now is up. And it's showing up with a 90-point gain on the index. Surabhi.
Okay, all things sweet are sugar. So that pack is really off on a pretty good note. Bajaj Hindustan, about 7.5%. Renuka volumes are big on these stocks as the day is kicking up. Even pull up a Triveni Engineering. Good news for all the distillery and the ethanol manufacturers. Up about 6% there. So sugar is a very, very sweet spot in the market today. But on to individual names on the Nifty itself. Nifty is managing a 90-point up move for the time being. L&T is the big winner. 1% up, followed by HDFC Bank, about 1.25%. The Bajaj Financial Twins, Finance and Finserv, both of those stocks are up and about. There is some buying on NTPC. Then there are some FMCG names like Britannia and HUL that are doing pretty okay. Hero Moto and Mahindra continuing the form, and there's Reliance up 0.5%. Just curious to see what Tata Motors is doing. Stocks cooled off after yesterday's massive move. It's down about 1.5%, but otherwise it's a good opening for the Nifty. About an 80-point up move, and plenty of flair on the large cap screen.
Well, that's right. HOEC, there's some news out there which was flashing for your screen earlier. They blocked D80. Both wells, D1 and D2, they have been activated for production. I think this was the trigger for the stock, so that's why HOEC is up closer around 4% as we speak. So big up move is what we're seeing out there. The other one I'm looking at is Nidlon. There was a large trade that took place in early morning session, so that explains why volumes are massive on Nidlon, and also you have a bit of an up move on that stock. So keep an eye out there. Chambal Fertilizers has been in a bit of a range, but from the F&O basket, well, that's one of the big gainers in today's trading session. And Voltas, that's actually been moving quite well. Well, that's cooled off a little bit. It's down closer around 1% as we speak. So a good start, but that MSCI rejig takes place later today. So that's going to be top of mind. And HDFC Bank, that's now cooled off a little bit from the top. That's the stock to track because bulk of that $5.5 billion inflow will be towards this large name.
Well, 85 points higher. We are up above 25,200, 25,235. So, I mean, a lot of sugar I can see as far as the top volume traded picture. Balrampur, Renuka, Bajaj Hindustan, there is Praj, which is up 5%, EID Paddy, Triveni, Dhampur, Dalmia, Dwarikesh, Awadh, Magad. I mean, Uttam Sugar, Andhra Sugar. I could go on. I mean, 8-10 names, which are all... and they've got volumes. I mean, they don't show up. Many of these don't show up with large size volumes right out of the gates in the morning, but they are now. So that's looking good. And we should have some of these names up at the bottom of the screen as an alert just to keep track of what's happening. Oil India is up 3%, so that's a sort of new non-sugar name in the mix in the morning, 3%, so 756. We've got what else? I mean, actually, it's kind of tough to find non-sugar names. So Patel Engineering maybe 4% higher. Bharti Hexacom, I saw an initiation from one of the brokers this morning. Bharti Hexacom is up about 2.5%. Stocks at about 1200 plus at this stage. So that's it. I mean, as far as the broader markets go, in terms of what's up, 4:1 is what the advanced decline right now looks like. On the downside, you've got Tata Motors, which is down 1%. So it's a top volume-led loser, but of course the cuts won. Paytm is down about 1.25%. Paytm is done well from the lows, 350-ish or so, started moving up and it's come up to where it is now. We mentioned CDSL already. PB Fintech is another one which is down 1%. Voltas is down about 1%. KPIT Tech is down 1%. Zentech is down about 3%. Kernex is down about 3%. NIIT Limited has had a sort of rocket-like move recently. That is taking a bit of a halt as well. So this is, I mean, essentially the bulk of what we have as far as price action is concerned. I mean, there is more stuff and we can maybe talk about this. Look at the, I think the Prestige stock was higher where there is the QIP. And the Max stock, Max is selling off about to about 660-ish or so, is down about 3.25% as well. So two real estate companies in the market to raise money, and a lot of them are. So why not? Samir Arora is with us, founder and fund manager at Helios Capital. Samir is our market master of the day. Great to have you with us here, Samir. Thank you very much. Appreciate it. We're chatting after what seems like a while. So
we spoke after the budget and everything. So quite recent.
It's been feels like distant memory, and the market reaction after that, and all of the sort of crazy stuff. But the market's moved on, Samir, and it's looking stronger even without banks participating, right? So how are you?
The best comment I heard was from you just now saying, "Oh, HDFC Bank is at least not down today." Which is how sad it is that this is the situation. But yes, the market has done well.
Yeah. Go on, sorry, please.
Yeah, I was saying that the FIIs are willing to buy anything if you offer them a 3% discount. But if you ask them to come into the market, they don't like it. So I don't understand. For example, yesterday was, that big block of Indigo, whatever, 10,000 crores. But the net FII flow was so much less. Maybe it was mutual funds, I don't know. Maybe it is just that the FIIs want to buy only blocks for some reason. But overall, it every day looks a bit much if I look at history, that so many placements, so many QIPs, so many IPOs can happen. In the past, that is in the 2000 era and the 2007, I used to always say that two entities, and please, these guys should not take it personally, but in those days I used to say that Enam and Kotak bring down the market because they did so many deals that in the end, the market used to not be able to handle it. Now it is beyond the size imagination that we ever had for our market. So far, so good, I would say. But always a bit nervous because of looking at history.
Yeah, no. So anecdotes is what makes the market also, right? Stories. And I was talking to somebody yesterday, Samir, an old-time investor, and he was saying that nowadays, and it struck me, he said, nowadays when we speak to other investors, nobody's asking what are you holding or what are you buying? Because earlier it used to be,
they have their own
curiosity. Everybody is just focused on their list and everything is done well. That has gone up 2x, this has gone up 3x, this has gone up 4x. So, but it's all gone up.
Correct. But, I was reading, because now if the old guys like me say that the market is a bit hyped or that the SMEs are, the speculation we have not seen, the public, at least, because now, unlike the previous episodes, you get feedback from the market, from the public because of Twitter and other social media. They say, oh, these big fund managers are jealous of small guys making money in SME. So on behalf of all the fund managers, let me tell you, we are not jealous of somebody making money in SME because that's a different game. It's like saying, oh, I am jealous because yesterday Amazon stock went up 5% and Mr. Jeff Bezos made $2 billion. Sorry, you're not jealous. You're only jealous of each other in the same category. This SME is a different speculative group within intra-retail. But I would say you are not making money. The other retailer is losing. So collectively, it's a game within the retail. You can keep thinking you're making money. Collectively, you're not. But I would still say it is a bit too much. Some of this hype is too much. Look at this IPO. Forget about this recent IPO, which whatever is happening now.
The Yamaha showroom one.
No. I'm talking about the big IPOs now, this Premier or whatever. It's a good company, agreed, let's say, and you buy it. Who's supposed to buy it on day one? I've not understood. What is he supposed to think when he buys it? Okay, today it's okay. But in theory, it has to open up, I don't know, some 50, 60, 80%. Otherwise, this 200, 2000, whatever number times oversubscription would itself be losing money. But conceptually, who buys it that day? And what is his game in buying it that day? That also has to be resolved a little bit when a guy is buying an IPO, that what will happen on day one if it goes up X%? Why should the next guy buy it? Of course, somebody will buy it, because there is this tendency on day one of an IPO for some large guy to think that this is the only day he can get a float, so he can clean out the float because this is a mid-cap company. So if collectively we buy $800 million and $1 billion, all of us, because the float is so much, then let me tell you, I had a bet with one guy, who's still my friend, in 2000, who told me that it is guaranteed that Wipro can never fall. Because he said the float is this much. It was only some 15% float in those days. The market cap is this much, but the float is only this much. And this is the amount of money that comes in. So its index weight is higher, because in those days there was no free float. So it can never fall. Then another group presented to me in 2007 how in DLF, the IPO is over 10. I mean, the market cap is 10 billion. You totally need 1 billion. These are the big guys. These are the guys who will never sell, because these guys got it in anchor or whatever. So these guys are long-term holders. So the float is only 350 million. So 350 million is so many days. So it can never fall. We have seen all this. Now, again, currently we can say it's not happening. So people can say the old guys don't know anything. But little bit of nervousness should be there. It doesn't mean anything. We are also fully invested. It's just that you have to know all these things a little bit.
No, yeah, nervousness or a sense of wonder. And again, on that point of foreigners, I mean, so as you said, they're happy to buy 5% discount, but they don't want to buy. That's what you began by saying. Why. Yeah, I mean, but so usually, I mean, look, markets, if they stay higher and they keep going higher, it can paper over a lot of stuff, right? I mean, you start to believe that actually, and maybe things are good, but you start to believe they're really good. And that's natural.
So I think the only thing we can all do, because we are also bullish about the market and we don't want to give up. But all you do is stay away from the obvious things, I would think. Obvious bad thing, or obvious hype, or 100 PE, or things which are so far into the future, or the same thing being repeated again and again. By the way, as a result of all that, over the last 2 months, actually, we've gone back into IT. Because it still looks okay. We know the companies and there is some turn. And you can also sense it from the fact that suddenly all these guys want to do analyst days or analyst meets. So, if a guy wants to do an analyst meet right now, he has some positive spin to give or some positive episodes, incidents, stories, orders. So the point is just stay away from the obvious bad. Forget about things which you think are not bad and turn out to be bad as part of life. I think that is the only thing I can do myself, and that is what we are doing.
That's good advice, and you're on point on IT, right, Samir? The index has done so well. Individual stocks have done even better. I mean, it's been the poster boy of August, actually, through all the roller
last
coaster.
Month and a half. Yes,
absolutely.
Yes.
It's been IT's month, and I'm glad you came back to this, because I was just thinking the last couple of times we've had you on, from politics to elections to budget and taxation, we've discussed so much in economy. Let's get down to brass tacks in terms of what you're doing in the portfolio. So you've already given us sort of one clue here, that you've gone back and put some in IT. What else? But I don't know if you participated in Ola, for instance.
No, not what else. Because, depending on what you call IT. For example, I used to own this KPIT and all. But I don't call it even IT in the sense that it doesn't move with these 4 or 5 big moves. It's a different company. That way you can also
business.
We also own this small company, Indigene. Now it's IT, but I'm saying it doesn't move with the IT crowd. So if you call all of them, then we are now some 15% weight. But if you call these regular old IT gang, the TCS, Infeed, HCL Tech types, then maybe we are 9.5%, 10%. So please understand, to move 10, 15% of the portfolio or 10% of the portfolio is all you can do in a month, 2 months. You can't say, no, what else have you done? Because
no, fair.
Selling something, buying something kind of thing.
No, fair, absolutely. And I like how you call them, the old IT gang versus the newer businesses and more niche businesses. But okay,
which are called IT, but they don't move with the
old IT gang. No, absolutely. I got that. But while you've made this tilt in the portfolio towards IT and the newer age IT, let's call it newer age, technology, what have you pruned down on? Or is this just incremental money you're putting in there? Or what are you selling down or getting away from or taking profits from?
Incremental money won't do it in the sense we're talking about the full weightage changing. So it means you have to move it with everything. So basically what has got pruned down, as I said, was the capital good PSU type stocks, because I think that there was a bit of a post-budget. You needed more, according to me, of course, the stocks have still done well, but broadly you needed more stories, more conviction on that and more stressing on that from the government. And to me, it looks now that the government is moving the capex on the account of the individual PSUs rather than doing on account of the government. So when the government is doing it, then some companies are getting the orders, is okay. But if BPCL or HPCL or Coal India or somebody is saying that we will invest $6 billion or we will invest $10 billion, according to me, the guys who are spending the capex and spend it over 3-4 years, I don't call them beneficiaries of capex. They are the guys who will have to then, and mostly they are doing it in somewhat unrelated areas. I mean, unrelated means somebody is doing in petrochemical, somebody is doing here, things which are long term, and then you prove yourself in that project 5 years later. Normally, we buy companies where the capex is coming to an end, so that you can say that, okay, now the drag of this blocked capital is over and numbers will improve, financial returns will improve. So when you are starting a 6 billion, 8 billion capex, I am not into those kind of stocks.
So you mentioned you've sort of climbed down a bit on capex. So that means no railway, no defense, and you also mentioned you're staying away from 100 PE stocks. And then I'm trying to marry both the ABB and Siemens of the world.
Actually, those, unfortunately, I never had.
You never had, yeah.
No. So railway, we don't have now. And we can see the change in the priorities of the government in terms of, even changing the money where it is being spent, instead of being spent on these big air-conditioned Vande Bharat type trains to newer, more basic trains, or maybe more on safety equipment or whatever else. But these are the things which change what you were buying and then what happens. For example, there was this company saying that we didn't have it, but I'm just giving as an example that I will get orders of air conditioning of all these coaches. And now you say we don't want air conditioned coaches, we want basic coaches, because otherwise the public is getting upset that all these trains are very expensive or whatever. So these changes happen, but now they are happening. One is general, we say that, this risk is always there of change in policies and all. It's not so much change in policy. It is maybe realization that these marquee projects are good, but you have to first do some basic things right in terms of security, safety, whatever. So for whatever reason, post-budget, we changed that. And with that money, you can say on the margin, we have moved it into ITS.
All right. Hi, Samir. Good morning. What about defense? Though the headline index
defense,
is
actually, most of my guys have sold, but I didn't sell because I'm telling everybody, in my hedge fund, I do massive call writing on this. The premiums are so juicy that I feel like, okay, I can drag it for a few months, but basically I'm willing to let them go if somebody was to hit my prices. But there, what I'm doing is I'm basically writing very massive. You get 6, 8. I mean, not 6, 8. You get 5, 6% in a month, 4% in a month. It's crazy. But in my mind, I have switched off from that. Yes, I don't want them. But they have, technically, I have them. The others don't have them.
Got it. Samir, so 2, 3 other areas I wanted your thoughts on. Zepto. By the way, we have an interview with the Zepto founders.
The two guys. Okay.
Yeah, we're gonna play. Our colleague Shireen interviewed them, and we're gonna play out sound bites through the course of the day. a lot of interest around this. Quick commerce, actually, right? But there's interest from investors, but also interest from other players. Big Basket, for example, is going full quick commerce.
Everybody will come in. Everybody will come in. Flipkart will come in. Everybody will come in. Yeah. So that is a bit of an issue for my company. But, because the difference between this and, let's say, the paint industry, because we actually discussed it in our meeting, that in the paint industry, we realized 1 year ago that this big fellow is coming and there'll be new production and new marketing and new brand or money will be spent. Here, the only difference is that you're coming into an area where the overall GMV of the industry is so small that the whole thing is still growing. So in a thing which has just started, and I think it's some 4-5 billion is the total this thing out of the retail overall, and you are basically doing it in 7-8 cities, although technically I think Zomato is in some 20 cities or whatever, Blinkit. So we thought it's a bit early, and also these guys will have to prove themselves. We have also seen in the past that the guy who first, and if he's doing well, continues to do well, unless the market size becomes an issue, which is what we thought in the paint industry, which seems to have worked out a little bit. So we are staying there and we are not going to do anything. Also, please ask the Zepto guys, or maybe solve the interviews already over, that they should talk about size of business. One fellow out of those two always talks about market cap of the company that he's trying to create. Again, the old guys would say, you don't create the market cap, you create your revenue and profit and service or whatever. Big picture advice, free advice to anybody who I come across.
And I think I'm sure they're listening. Samir, just...
Because they always say that. I know they always say that. We are creating a 50 billion company, 20 billion company. I mean, it's okay. It's young guys.
Aspirational.
Okay. And they've done well, so no question about it.
Of course. Just a quick word. All these, how should retail watch all these big IPOs? Ola, for example, has been I think, surprise to many who participated, did not participate. Even institutional guys who got in early, they were also surprised by the sharp run-up. That is one. We got Hyundai coming. We've got this. Yesterday there was a report saying LG from Korea is coming, and
everybody
you hear a lot of
will
this.
come. I think Google will come next. They are only 30p there. They should come here and trade at 100p.
No, so that is the point. But when you say in Korea, for example, Hyundai is trading 5p. At 5p, and here you'll get 40. But you're buying you're not buying the Korean Hyundai business, right? You're buying the India business. In that sense.
Yeah, but that's okay. But so what the other thing that was done by the Indian companies is that you go to Africa and buy an African asset and you list it in India, which has happened in our consumer sector, or you buy Moroccan orders, or you buy a business happening in the paint industry in Middle East or somewhere, and it is listed in India at 70p. If you look at that, the same, that part of the revenue, if it was there, it would be trading at 8p. So all that is part and parcel of a bull run. I am only saying to everybody, including to us, participate in the IPO. You will not get a lot. But on day one, who's supposed to buy on day one? In theory, if it goes up, obviously in theory, because it's oversubscribed a lot, so in theory it's going up some X%, which is 30, 40, whatever, 50%. Then at 50% up, who are the guys buying? And please, you guys do this. Nigel should do this. Analyze the IPOs, not from the listing, not from the offer price, but from the first day listing or even the first day closing price. Because then is a genuine this thing that what happens after that. Then you will see that the returns are not very high. So in theory, we can, I think, I don't know exactly, but informally, if you say that from that day, the returns are very normal, then your exit is threatened. That means the guy who's buying in the IPO.
Yeah. All right. Yeah. I think couple of I'll work on that, Samir, and a couple of instances that come to mind. Idea for Tata Technology. Tata Tech. Yeah. Yes, it's not moved at all from there. Since we're talking about IPOs, very quick.
It's down 20%.
It's down. Right. I think 1,300 or so, and I think the deal happened last week or so. But before we let you go, Samir, Ola, we have briefly mentioned that. Did you participate?
No, I didn't participate because we have to hire some 18-year-old guys in our company. We only have some 30-year-old guys so far.
No, and in fact, that created quite a buzz. When you all put that out on Twitter, people were saying, not asking what Samir has bought. It was like, what about that CV? Can you reach it to them? So 1-2 CVs I sent to them. Sure, I should have a look at it and let's see.
Okay, all the 18-year-old guys we'll interview first.
So while as you get the 18-year-old brigade in, just to round this off, Zomato, would you be a buyer now? There's Swiggy coming because you're very bullish on quick commerce. Everybody's getting in. But again,
but,
the price, the valuation.
I don't know about Swiggy, but I don't think that their, what is it called, Instamart or whatever, is as good as Blinkit. I must tell you, I'm right now in
It's
Dubai.
Fabulous. I'm a user, huh?
Last week I was in Delhi, and at 6 a.m. we ordered a clothes wire for drying clothes on Blinkit. 6 a.m. at 6:10, 6:09, the fellow was there. Crazy. It's absolutely crazy. But it's an early stage, therefore I think we can all hope that the industry or the segment does well.
There is a longer sort of run where you can order, you can shoot a printout and they'll get you that one printout.
I haven't tried this, really?
Try it. $7.
Everything. And they can get absolutely everything. Even when you're traveling overseas, you want to collect extra
I got all kinds of puja stuff, including aam ki lakdi for a recent puja in the house. It was phenomenal.
And by the way, for Swiggy guys, the it's coming at $10 billion. Pre-IPO, the private thing has started. So they're selling it saying 30-40% discount to Zomato.
Yeah.
So, something great.
But that
great
much
chat.
discount should be there. That much discount should be there for unlisted to listed. Because otherwise, how will your issue get oversubscribed 20, 30, 40 times? Which means you're supposed to make 30% on day one for whoever. Thank you very much.
Thank you very much.
Thank you. Great talking to you.
And lovely chat and lovely stories and anecdotes. Thank you for joining us. I think the market, by the way, is up about 70 points, 25,224. So it's come off a little bit from the day's high, but is looking pretty solid all across. I think we have the next management with us.
Let's get straight to that. KEI, that's the stock in focus. It's up more than 40% in this year. In fact, UBS has initiated coverage with a buy rating on the stock. To discuss this and more, we have Mr. Anil Gupta, the CMD of the company. Hi, Mr. Gupta. Good morning. Thanks a lot for joining in. Well, KEI has ramped up the branded wire segment, I think from around 16% in 2018 to around 29% in 2024. Now, UBS says that KEI will benefit from this consolidation in the wire market, and they are estimating 4,000 crores of revenues from the branded wire segment by 2027. You think it's doable, Mr. Gupta?
Good morning, Nigel. Yeah, I think at this moment we are, close to 2,500 crore rupees on the wire and flexible segment, the branded wires and flexible segment, and I think by 27 it will be doable. That we are almost growing at 20 to 25% in this segment every year. So 27 is just 3 years away, and it will be possible.
For that as well, you think it could be earlier?
I guess maybe, but no, I can't commit.
Okay, let's focus on a couple of other segments then. Switch gears, small electrical products. There's a big scope of business out there, right? Currently, how much do they contribute, and where do you see that number headed?
No, we are not in FMEG business at all. We are only manufacturing wires and cables, and we are not in the switch gears or switches or other low tension electrical products. So, and at the moment we don't have any plan to do that.
No plan. Got it. All right. Then tell us, how is the demand picture looking like? Could you tell us where is demand coming from? As per your observation, Q1 is done. We're mostly through, 3/4 through Q2 as well. How is demand shaping up? If you want to give us a volume growth estimate for this year.
We expect a 17 to 18% volume growth in this year. And the demand is pretty strong, especially from the energy sector, solar developers, data centers, and a lot of other. I think most of the sectors and transmission and distribution sectors in the energy space is doing very well. And I think most of the sectors in our industry, wherever wires and cables goes, are doing well, in my opinion.
Mr. Gupta, there's also sort of a lot of chatter around the possibility of you getting into related spaces like switches and switch gears and maybe, some sort of other electrical equipment or appliances. Can you give us an update on the plans? I mean, if they've firmed up yet, what are the timelines they're looking at, and what is the kind of investment you'd be looking at in this side?
I have just mentioned that we have no plan to enter diversify from wires and cable segment, and no plans to enter switches or switch gears or other related electrical products.
Okay. So not even switches and switch gears. Got that. So that's out of the way. Just talking about the potential in the branded wire segment itself, there are certain reports that are indicating that you should be getting 4,000 crores of revenue from branded wires by FY27. Just what is the competitive intensity in the market right now? And in terms of, you've given some volume projections, pricing, do you see any element of a price hike possible? How intense is competition? Because there are a lot of players, now in the branded segment.
I agree that there are a lot of players in the branded segments in wires and cables, at least 6, 7 I know. And but this space is also growing very well. And the companies who are able to create more interest with the distributors and the influencers and able to pen out their marketing activities, in the farthest part of the country, including rural areas, are getting benefited. And we have also done so, and we are focusing on the business development activity with the actual users also, not just with the distributors, etc. So that is how we have been able to grow faster.
All right, very quickly, if you could give us your rough market share that you have. I think back of an envelope suggests it's around 10%. And do you believe that you can, increase your market share from here on?
Overall, wires and cable segment, we are at 12%. And 12%. So if you talk of only the branded wires segments, I think we are operating at 7 to 8% at the moment.
Okay, all right, Mr. Gupta, we'll leave it on that note. Thank you very much for joining in and giving us some perspective on the business. Wish you good luck for the rest of the year. We are taking a break on that note. Come back on the other side and we'll be in touch with the management of Bazaar Style Retail. Now, this is a company that's going public. The issue is opening out today. We'll connect with, in a bit after that, we'll connect with Pramod Patwari. Go back to the sugar story. He's CFO at Balrampur Chini Mills and talk about the recent regulatory changes and the removal of the ban on sugarcane for the use of making ethanol. Welcome back. So, as promised, the next company on our radar is one that's going to be making its way to the street shortly. Bazaar Style Retail. The IPO is opened out for subscription today. The IPO is consisting of a fresh issuance of shares worth 148 crore rupees and an offer for sale for about 687 crore rupees. To talk about the plans and the way forward, we have with us Mr. Pradeep Kumar Agarwal, Chairman Bazaar Style Retail, and MD Shreyans Surana also joining in. Thank you, gentlemen, so much for being with us. Mr. Kumar, I'll open out with you. So tell us the whole thought process, the rationale, because a lot of this is OFS. The money going into the company is less than 150 crores. And I think you're using a lot of that, most of that, to repay debt. So tell us, what will your debt levels be once you, repay? And just the reason for coming to the market and what you envisage ahead.
Yeah. We are mainly using the proceeds to repay the loan, and our company will be debt-free after this IPO.
Right. Okay. Gentlemen, good morning and congratulations on the issuance. Now, Mr. Agarwal, if you can tell us, you've got the largest retail footprint in Eastern India, right? Versus other.
We are the largest footprint in Eastern India.
So so V-Mart also operates in some of the markets where you're present?
Yes. V-Mart is also there. V-Mart, V2 is also there in some of the market in Eastern India.
How are prospects looking? I mean, I was looking at your matrices compared to the other listed players, but how are prospects looking? Because at the lower end, for the longest time, we've been speaking with V-Mart for quite a bit, and they've been telling us demand remains quite subdued, etc., etc. And then not recently, but over the last couple of years, there is Tata Zudio, which has come through in that segment, and they've sort of grown rapidly. So just give us a sense of what are prospects looking like for you from a market demand perspective in terms of the products you're offering?
Yeah, Judio is basically value fashion. They are offering the fashion garments only. That is the copy of Zara, you can say. And their presence are basically in tier 1 and metro cities only. And we are focused in tier 2, 3, and 4 cities. We are offering the affordable garments to our tier 2, 3, 4 and 3, 4 customers. Basically, in the tier 2, 3, and 4 cities, the penetration of organized retail is till 24 was only 30%. And going forward, it is projected to grow by 21%. CAGR, till 27.
Okay. All right. Hi, good morning, gentlemen. Thanks a lot for joining in. Well, just to get that point out with regard to your borrowings, you'll be debt-free post this, right? Post this issue.
Yes.
Got it. And what were your borrowing costs? I ask you this because last year your PAT was roughly around 22 crores. But on this, 170, 180 crores, there'll be some interest costs, which post being debt-free, it'll flow to the PAT. So what was your rough interest cost last year? You were borrowing at around 10%, fair to assume?
Yeah, it was around.
Hear you. Yeah.
Shreyans, we can't hear you.
It's 13 crore. Am I audible?
13 crores, got it. So that flows down then to your profitability, got it. 13 crores was the interest cost. Tell us about the total number of stores that you plan on adding, and what about the geographic mix as well? As you'll have been mentioning, East is where you'll have higher amount of exposure. So where does this number head to?
I'll just brief you. Am I audible?
Yes, very clearly, Shreyans. Please go ahead.
Yeah, I will just brief you. We started our journey in 2013 from 2 stores in Bengal.
Yes.
And in FY14, and as we speak, as of FY24, we are at 162 stores across 9 states, 146 cities, almost covering 14.6 lakh square feet of retail space. Basically, what we have done is we have followed a cluster-based model. What exactly is cluster-based model is that whenever we go deep into whenever we go into a state, we go deep into that state. We try to capture every district of that state, so we can create a brand for building for us. We can create that brand loyalty among the consumers. Apart from that, our focus is majorly in tier 2, tier 3, tier 4 cities, where as Pradeep said, the organized penetration is very less. And what we are trying to do is that we are playing on 3 things. One is the variety of the articles, assortment that we create. Second thing is the experience. We try to create a shopping mall experience with a good premium feel, with air condition facility, exchange facility, trial run facility in tier 2, tier 3, tier 4 cities. And third is the creation of fashion altogether. So a mix of all the 3 things is helping us to have a higher traction of footfall. And as per our intent is concerned, from FY17 to FY24, we have grown at 26% CAGR in terms of revenue. And in last 3 years, from FY22 to FY24, we have grown at around 32% in terms of CAGR. So our intent will be to grow in the existing cluster only, because there's a huge room of scope that I see in these areas only.
Sure. Mr. Agrawal, just to go back to the second part of my question. So I asked you about the debt, and I also asked you why you were coming to the market. So if just expand on that, sir, because like I said, only 150 crores is coming to the company. The rest is offer for sale. And also, if you've had any conversations with some of the selling shareholders, Mrs. Rekha Junjunwala is one of the shareholders who will be selling. Have you had any conversations? Will she continue to hold some stake in the company, even in the post-listing space, and what the thought process is? Why are you coming to the public, apart from this OFS?
Yeah. Late Rakesh invested in our company in the year 2017-18. And he liked our model very well. And he think that the tier 2, 3, and 4 cities will grow more and more. And Rekha ji is selling only 50% of her holding, and after selling, after post IPO, that her holding will be around 3.9%.
All right, got it. We wish you the best of luck, both of you. Thank you very much for joining us this morning, and we'll speak again on listing day. Thank you very much. Now, back to the sugar story, right? The government essentially taking out any caps on diversion of sugar for ethanol. We have the management of Balrampur Chini now joining us. Pramod Patwari is CFO of the company. Mr. Patwari, good morning. Great to have you with us here back on the program. And congratulations, I should say. It's come through, long expected. Implications, sir, for Balrampur Chini. Does it up the Can you hear me, sir? Mr. Patwari? I don't think Mr. Patwari can hear me. We'll just try and fix it in a minute. And I'll just have him back. Well, 90 points higher is what you have on the Nifty, 25,240. It's looking solid through the course of the morning so far, although it's been not that long. And market breadth is looking up as well. 1,500 stocks are higher, and you've got about 850 stocks which are lower at this stage. I just want to take a quick look at the newer movers in the mix that we have so far. Praj is, I think it's still a lot of sugar, but ex-sugar, Tata Elxsi is a big mover, which was not there in the mix in the morning. 82.80 or so is where Tata Elxsi is at. More in a bit. But I think Pramod Patwari, CFO of Balrampur Chini, is with us to talk to us about the announcement from the government in terms of removing caps on diversion of sugar for ethanol. Mr. Patwari, thanks very much for joining us. What does this mean for Balrampur in terms of volumes that you will do, sir? And, how big a positive is this? Does this kind of remove any uncertainty that may have had, although this was widely expected? Go on, sir.
Good morning, Prashant. Yeah, you are absolutely right that it will definitely remove a lot of uncertainty. But we always believe that last year decision was a temporary decision. As far as the Balrampur Chini is concerned, we have total distillation capacity of around 35 crores liter per annum. This is on the basis of 335 days of working. Now, we produce around 3 crores liter of ENA on an annual basis. That leaves us with a balance of 32 crores, which is absolutely available for production of ethanol. We have one distillery, which is a multi-feed distillery, wherein we can produce around 5 crores liter of ethanol in an off-season. That means the remaining 27 crores is available for production of ethanol out of juice root and B-heavy. So it will definitely have a big impact as far as the liquidity to the Balrampur Chini and the profitability is concerned. It will overall improve the liquidity in the hands of the sugar industry as such, and it will help the industry to pay to the farmers on time the cane price which is announced by the government. It is a very welcome move from the government.
Got it, Mr. Patwari. Good morning. Thanks a lot for joining. And give us a number then. For this year, what do? You've nicely broken up the capacity and how things work. For this year, what should you be working with? And for FY26, what should that number look like? That's on volumes. And there's a demand, there should be a price increase as well on the ethanol side. How much are you all rallying for? How much you'll be satisfied with?
So, Nigel, good morning again. And as far as the pricing is concerned, in 2022-23 ethanol year, the FRP was 305, and on this basis, juice-based ethanol was priced at 65 rupees 61 paisa per liter. Now for the season 24-25, the FRP is standing at 340 rupees. So there is formula and mechanism already in place. We have just requested the government to continue with the same formula. So, and whatever little increase they can consider on account of increase in the conversion cost. So that is on the pricing front. For Balrampur Chini Mills Limited, you will be knowing that this ethanol year will begin from 1st of November. So we will have only 5 months of production coming in this year, and thereafter it will get spillover into the next year. In any case, the impact of this relaxation will be felt in the next year only as far as the volumes are concerned.
Correct. Okay. So volume for this year will be around 23 crore liters, 24 crores. Should that be a fair estimate?
I think it should be in the region of around 22 to 23 crores liters.
22 liters. Got it.
Okay. So, sir, take your point that...
Yes.
Next year, next year it can be around 32 crores liters. So there is an upside of almost 9 to 10 crores liter in a year's time.
Now, please translate that. Help us sort of translate that in terms of revenue implication as well. If I look at the first quarter, the sugar business did a revenue of around 1,130 crores. Distillery was at 424 crores. Now, let's talk full year basis. Now that the limitations are out of the way, full year, what are you projecting for the sugar business and also distillery now that you get in the 5 months of additional higher ethanol revenue?
So it will be easy for me to convert or explain to that on a season basis. So on a capacity of say 35 crores liter on an annual basis, the distillery revenue can be in excess of 2,000 crores. maybe 2,100 or 2,200 crores on a full year basis. Now, when we produce that much of ethanol, that means we sacrifice sugar through juice route as well as through B heavy route. So production of sugar in that situation comes down. If we assume a production of 1 million ton, so that is on a seasonal potential of revenue on a full year basis.
Okay, so if we put both together and try and gauge the top line impact, sugar and distillery, because as you're explaining, sugar will have to go down a bit and the distillery volumes and revenue will pick up. Full year basis, revenue growth for this year with the 5 months of kicker and perhaps next year, FY26, any sort of sense that we can work with?
So FY24, we had a revenue of 5,500 crores. And on the basis of maths, which I explained, which again will depend upon the feedstock availability, which is cane in our case, the full year revenue seems to be in the region of around 6,000 crores. But again,
that's
maybe
FY25.
at the cost, not for 25. A part of it will accrue in FY25, which is difficult to predict at this point in time. And the balance will accrue in FY26. So on a full year basis, on a season basis, now this business can give us a return of around revenue of around 6,000 crores.
6,000 crores. Sir, just a word on sugar, because the math that we've just discussed is based on policy as of now. If the government gets a little generous and allows exports, I don't know, are you even expecting that? Because allowing exports when we are looking at the festive season coming up, maybe that's just a wrong expectation to have to begin with. Tell us your thoughts on that front. And if exports open up, what that will mean for the sugar business.
Extremely relevant question. So to answer that, I think we will have to start with a inventory available into the system as of now. On 1st of October 24, as per our calculation, we will have an inventory of around 8.5 million ton at a country level. We are assuming a gross sugar production of around 32 million ton. Now, out of this 32 million ton, on the basis of this ethanol policy relaxation, we expect around 4 million ton or maybe max 4.5 million ton will go into ethanol. Even if you assume 4 million ton, that means we will have another 4 million ton of 32 minus 4 is 28 against a consumption of around 29 million ton. So we will draw 1 million ton from an opening stock of around 8.5 million ton. We don't need sugar in excess of 5.5 million ton on a normative basis when we close the season. So there is a scope of 2 million ton of further exports which can be allowed. But what we understand, government would like to see the progress of the season and thereafter can take a call.
Okay. All right. Very quickly, Mr. Patwari, last time the conversation was a little bit short, but I need to ask you on PLA. That's the next big trigger, and brokerages have started penciling in some numbers. You're going to be putting 2,000 crores. Total capacity, I think, is around 75,000 tons. Now, I have a DAM Capital note that's saying that by 2027, you should do around 550 crores of revenues. Do you think it's doable?
So, Nigel, as we have said in the past also, at this point in time, we do not have the liberty to say anything as far as the financials on PLA is concerned. So whatever we have said in the public domain, which is in the public domain, that yes, we are putting up this capacity at a cost of around 2,000 crores. And we expect to commission this project in October 26. So part of revenue from the new stream of business will come into FY27 and the rest will get spillover into FY28.
Hopefully next time around we'll get some numbers, Mr. Patwari, but thanks a lot for joining in. You've helped us out with particularly the ethanol business as well as the sugar business. Next time, maybe a sneak peek into the PLA business as well, which will bring some money. Appreciate you joining in. For the time being, though, we'll slip into a short break. You come back, we'll focus on the commodity sector. We have Manisha Gupta, who's waiting for us.
Okay, welcome back. We've got the market, which is sort of cruising along nicely. 64 points off the day's high, though, but still looking good. Mitesh is back with us. Mitesh, just a quick word. We are up and about. The Bank Nifty is up as well, thanks to, I think, HDFC Bank today. But what are your trades?
The markets are doing decent. On the trading side, a buy on Syngene. I think that's a stock which is breaking into fresh highs. So keep a stop below 852 here and look for target of around 930. And also buy on RBL Bank. RBL Bank, I would recommend a buy with a stop just below levels of 224.5 and a target of around 242.
Okay, Syngene and RBL Bank. Got it. Thanks very much, Mitesh, for those two. Well, let's talk about commodities now. And Manisha is here with what is top of mind as always. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'm looking at metals yet again, and that is because all the gains that we saw in the month of August now really seem to be easing off, especially in case of copper. We are just about positive for the month of August. There was a time that we were up by nearly 7 to 10% for this metal and for various others as well. So copper prices, for one, have continued to decline. Today is a fourth straight day of that. The Chinese demand concerns really seem to be weighing on because all the economic data that is coming in from China, whether it is about housing or manufacturing, has continued to be on the weaker side. And all the stimulus measures that we have seen, and there have been plenty, by the way, but they haven't been strong enough or big bang enough for the markets to take their cue or change their structures there. And that's what's weighing on. Well, if you look at the LME inventories, we have seen gains onto that one too. With the kind of gains that we've seen overnight, the LME inventories now stand at a 322,000 tons, which is the highest in last 5 years. Also, the spot in sense of LME is at a discount now to the 3-month futures. Chinese copper prices also have continued to decline. BHP has come out with a report suggesting that last year Chinese demand was 6% on the higher side, while this year that demand has been curtailed to 1 to 2% on the higher side, but there is a demand growth nonetheless. Also, Nvidia, which is heavily invested within copper, has seen earnings kind of decline, and that outlook also is weighing. Nvidia, remember, is heavily dependent on copper-intensive data centers construction, and we have seen demand for that also see a bit of a weaker side. Also, there are concerns about renewed trade wars between China and the Western world, and that could hamper the copper demand as well. Markets also are looking at various other energy and metal prices continuing to decline. Coal prices, for example, are now trading at a 4-week lows. In the last 1 month, we stood all trading in the positive, but the higher sides in coal have not been able to hold on. Within metal sector itself, steel prices have continued to decline for a second straight day today, nearly 2% down. It's off 1-month highs for that one. Aluminum prices have come off its 2-month highs as well, as supplies show increase. The only thing that the markets will watch out for before we end this week is going to be the US inflation data. If that comes in any sense on the positive side, you could be looking at yet another weakness into the markets, but that data will tell you on how the metals will now perform for the next week.
All right, Manisha, thank you very much for that. That is commodities in focus. But, we've got SpiceJet, which is in focus as well. Sudarshan is here to tell us why. Sudarshan, morning.
Morning, Prashant. So the shares of SpiceJet is under pressure and the stock has fallen almost 6% in the early morning trade. And it's on the back of two news flows. First is company has placed 150 cabin crew members on furlough for 3 months. And the reason company has given is this step has been taken in response to current lean travel season. Another news flow is aviation regulator DGCA has put the airline under enhanced surveillance, and regulator says special audit conducted on August 7 and 8 reveals certain deficiencies in the operation, and that's the reason it has been put on surveillance to ensure safety of operations. As far as recent earnings are concerned, both in Q1 FY25 and Q4 FY24, company has reported profit for second consecutive quarter, but as far as revenue is concerned, revenue has seen decline in both the quarters. In Q1 FY25, revenue had fallen 15%, and Q4 FY24, revenue had fallen 19% year on year. But on EBITDA front, in Q1 FY25, EBITDA was up almost 6% on a sequentially, and in Q4 FY24, EBITDA was up almost 20% on year.
All right, got that. So SpiceJet on the radar as well. Thanks very much, Sudarshan, for getting us the details there. Well, we have to take a break now, but on the other side, our special segment, It's the Economy, coming up. Lata today will connect with Pranjal Bhandari of HSBC and Nikhil Gupta of Motilal Oswal Financial Services to decode what to expect from India's first quarter GDP numbers.